We have some news to report on Google. Something very, very, very unusual happened, and it's never happened before. They report their earnings after the closing bell. What we understand in this whole deal is that there was an 8K filing that was released without Google's permission that sent the shares that were up at the time, they were around $753 a share, down to this very low when people seen the headline, and they were not authorized to release it. But it sent the shares down here to 676, and then they popped right here to 705. Then we sold back off because of the amount of emotion that went through it. Is that people were selling off, and part of that 8K filing, it was they were having a write down in their 8K, which is $1.63, which would make where the revenues would miss with this write down. And that was an 8K filing, not an earnings release. So what happened is there was a firm that released this report in the 8K filings without Google's permission. Rather, they break a lot of these trades for the institutional community and investors based on the fact that this is one of the biggest little Ponzi schemes as far as I'm concerned. Because look, the reason why we have earnings whispers and earning warning season is that the publicly traded company, if they're not going to make their report, they are by law, have to give a warning so that shareholders in the stock itself have a couple of weeks to make adjustments before the quarterly earnings get put out. And that's the way it's always been. Somebody released a report and it caused where the stock is halted, and in the 8K filing, it was a Q3 EPS of 903 versus 1066 capital IQ consensus. Revs of 11.33 billion versus 11.87 billion. So a little bit lighter on the revs in that 8K due to write-downs and things like that. Now, having said that, we can clearly see that the stock will resume trading. There will be a conference call and a regular earnings release after the closing bell. However, the damage has been caused, and it was a huge flash trade. And it should be titled as Google Flash Trade Capitulation. Now, one of the things that we always do here is we come back and we take advantage of the news. They sold it down very, very hard. People overreacted. They halted the stock. Someone releases an 8K filing without permission, and everything goes down. There will be a conference call. It was a capitulation. It was a flash crash, just like we had in May of 2010. That's what they did with this name. And you can clearly see that it was darn near, it was like an $80 drop. Close to it. So, we are going to go over here in Google. Everything will bounce off of that bottom. And we're going to get chances to buy Google at much lower dollar levels. And we will take full about attention. We will take advantage of this, and we will clean up. The shares remain halted. This is the after hours chart, 676 on that sell down, back to 705, and the halted the stock right here at 687.39.